So is the dollar losing its voice or just pausing to clear its throat before the next big line? Well, because right now markets are staring at a mix of jobs data, a cautious Federal Reserve, oil prices clinging to life near 5-year lows, and tech stocks trying to stay cool while the macro temperature keeps changing. Not exactly calm waters, more like mild turbulence with the seatbelt sign firmly on. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where I break down the key market drivers shaping currencies, commodities, and indices without the noise, without the hype, and definitely without pretending the market ever does exactly what we expect it to do. Let's start today with the euro. From a fundamental perspective, broad US dollar weakness continues to underpin euro USD. Mixed US labor data has reinforced expectations that the Federal Reserve is unlikely to shift policy aggressively in the near term. Yes, payrolls increased more than forecasted in November. And what I'm referring to here is yesterday's NFP report. But that headline number came with a lot of baggage. October's figures were revised sharply lower, and the unemployment rate climbed to 4.6%, its highest level since 2021. Markets are now pricing in roughly a 75% probability that the Fed will keep rates unchanged at its January meeting, and attention has shifted to upcoming remarks from Fed officials, and more importantly, Thursday, yes, that is tomorrow's US CPI data. On the European side, sentiment has improved as investors scale back expectations for further ECB easing. ECB officials have signaled that additional rate cuts may not be necessary in 2026, while President Christine Lagarde has indicated that the Eurozone has growth projections that may be revised higher next week. Add to that slightly easing political risk in France, and the euro has found some breathing room. From a technical standpoint, Euro USD is stabilizing around the 1.173 area after pulling back from those recent highs. The 100 period EMA has crossed above the 200 period EMA, with price holding above both at this point, maintaining an upward near-term bias. Immediate resistance sits near 1.179, followed by 1.188. Support is clustered around 1.167, then 1.158, with deeper support near 1.148. In simple terms, momentum hasn't disappeared. It's just taking a breath. Now let's talk oil. And yes, it's been a rough year. WTI crude is hovering around $56 per barrel, recovering slightly from levels not seen since early 2021. The short-term lift comes from fresh geopolitical tension after the US president ordered a total and complete blockage of sanctioned oil tankers linked to Venezuela. That move followed the seizure of blacklisted vessels and a visible increase in US military presence in the region. However, the rebound has been limited, and here's why. Markets are still grappling with the prospect of oversupply. Progress towards a Russia-Ukraine peace agreement has raised expectations that restrictions on Russian oil could ease, potentially freeing up more supply into an already well-stocked market. On top of that, OPEC Plus continues to restore previous shut-in capacity. Non-OPEC producers, particularly in the Americas, are ramping up output, and early signs of demand weakness are emerging across China, the Middle East, and the US. Looking at the charts, technically, price remains compressed near multi-year lows. And while geopolitical headlines can spark sharp intraday moves, the broader structure remains under pressure. Near-term resistance is sitting at $56.30, followed by the 100-period exponential moving average, sitting around $58. Near-term support is currently at yesterday's lows, around $54.60. Think of oil right now as a heavyweight boxer, leaning on the ropes, still standing, but clearly feeling the weight of this year. Finally, let's turn to tech. The Nasdaq 100 traded near 25,100, edging slightly higher on the session, even as broader US equity sentiment remains cautious. Mixed labor data has failed to reinforce expectations for further rate cuts, and that uncertainty is keeping equity futures subdued ahead of key inflation data. While the Dow and the S&P closed lower in the previous session, the Nasdaq found support from strength in selected heavyweight names, particularly Tesla, which hit record highs during regular trading yesterday. That said, the broader tech sector has been under pressure in recent weeks as investors question stretched valuations following the AI-driven rally of the past 2 years. Add in flat retail sales, cooling PMI data, and lingering concerns around liquidity and growth, and well, the Nasdaq is now walking a fine line between resilience and hesitation. Looking at the chart, technically price action remains elevated compared to earlier this year, but momentum has slowed, suggesting markets are waiting for a clearer signal before committing to the next directional move. Near-term resistance is currently sitting around 25,200, followed by 25,800. Near-term support is at yesterday's lows of 24,855, followed by the 61.8 fib level at 24,600. In other words, tech hasn't lost confidence. It's just checking the fine print. So traders, tomorrow, all eyes turn to the US CPI print, central bank commentary, and whether inflation data finally tips the balance in this delicate policy debate. The question here is, will the dollar find its footing, or will equities regain momentum, or will markets decide to keep everyone guessing just a little bit longer? Either way, I'll break it down for you in tomorrow's live market brief session at 11 a.m. South African Standard Time. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com or click on the link in the description and we'll go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.